We will take a look into the gold and silver markets, and in particular, how we're at a stretch of history, I would suggest, where if you're a student of financial markets and you're watching what's happening, where now the Fed is in this predicament where we already have inflation higher at a time when Trump had been clamoring for a year and a half about how basically Jerome Powell was the Antichrist for not lowering interest rates, and now he brought Warshin, who was on track to lower interest rates until you had the war begin and inflation started soaring. Whether Trump plans to call Kevin Warsh, the current Fed chairman, a loser numbskull, if he should have the audacity to raise interest rates, remains to be seen. Well, hello there, my friends. Chris Marcus here with you for Arcade Economics on Wednesday, July 15th. Hope you're doing well out there and enjoying your summer because certainly a lot happening in the financial world, in the political world, with the war unended once again, unfortunately. And at least as of last night, we hear Trump talking about hitting civilian infrastructure and a variety of things that I would suggest are not so ideal. Although we will take a look into the gold and silver markets, and in particular, how we're at a stretch of history, I would suggest, where in one hand, it's not an ideal set of choices to be making. Yet, if you're a student of financial markets and you're watching what's happening, where now the Fed is in this predicament where you have inflation shooting up. We'll look at today's CPI, where I guess you could say it was lower than expected. Expectation was for a lot. Um, we already have inflation higher at a time when Trump had been clamoring for a year and a half about how basically Jerome Powell was the Antichrist for not lowering interest rates, and now he brought Warshin, who was on track to lower interest rates until you had the war begin and inflation started soaring, which means that it's going to be a little harder to do that. Whether Trump plans to call Kevin Warsh, the current Fed chairman, a loser numbskull, if he should have the audacity to raise interest rates, remains to be seen. Yet, now here we are in July, and as I've said throughout the year, I think this is really going to be one of the more fascinating dilemmas in financial and monetary history of how the Fed navigates a very unenviable position. Every once in a while, someone will say, well, what do you do when you get in that position? And my understanding is that the best thing to do is not find yourself in that position, which the Fed unfortunately does find itself in. But let us take a quick look at some of our levels before we dig into that and a few other news items for your gold and silver markets this week. So, quick look first, we see gold sitting at 4,065. Silver still, unfortunately, below the $60 mark. Guess it's a matter of perspective. If you were just born in January and started following the silver market, down over 50% since then. If you were born any time in the past 50 years and waited for it to break $50, well, it's higher than that. So, either case, 58.10. Few other key ones here. We have the 10-year yield up at 4.5 on the higher end of the range of the past year. Here we are right before the war broke out. So there's been quite a jump. It's come back in and floated around that 4.5 level. We see a high got up to 468, 469 is the high of the past year. So slightly off the highs, but also showing you that things are not quite so ideal. And here we are now. It's past July 4th. The strait is closed once again. Little confused of where this leaves our supply chains. I don't think it's good. Obviously, we haven't really seen the carnage from that yet. And here you can see, look at the stock markets. They're still doing plenty well, as you can see over here, yet we'll keep an eye on that going forward, but not going well there. And also a quick look at the dollar index, where it's back over par. Quite a year and a half it's been, because here you see it was at 110 in January. That was about a week before Trump came into office. Then it got pummeled, was down to 96. I don't know if I would call this a rally. Maybe over the past, if you, whoops, let's go back there. If we are measuring from beginning of the year, where it was, higher than that point, obviously a bit lower than where we were last year. And given that Just about everybody in the Trump administration outside of Santa Claus has talked about the need for a lower dollar valuation. My guess is there's a strong chance before the Trump administration is done. And we'll see if that happens earlier than expected. I don't know that that's likely, although seems like we'll have some midterms. It would be interesting to see what those say about that. But I'm guessing that whenever Trump is leaving office, most likely in 2.5 years, that we will see the dollar index quite a bit lower. Guessing we'll see the US dollar lower against gold and silver, another way of measuring it with the dollar index here, measuring against a basket of other incredibly weak currencies. But anyway, over par and a quick look at our Shanghai silver spread, which we're now, what is this, month seven? About to go into month eight in another week or so of the elevated premium, which got jacked right around Christmas. It really spiked up the day after Christmas. Highly unusual. And here we are more than half a year later. It's got the amount of the premium. Means that it's trading $7 higher in Shanghai than New York. Seen that get as high as $18. This is on the lower side, yet certainly has not gone away at 12% there. So another thing that we will keep an eye on, obviously silver price on the quieter side, but also affecting the metals markets. I mean, really you have the war, which is not entirely unconnected to the situation with interest rates, but here is Fed Chairman Kevin Warsh that who rather in an unenviable position, or I don't know, I guess he chose to be there, but here it's interesting. We had the CPI come out this morning and fell down to 3.5%. So consumer price index fell seasonally adjusted 0.4%. The only problem was that was coming on the heels of a large draw increase the month before. So basically, consumer prices rose 3.5% annually, less than expected as the energy prices came back down a little bit. But in either case, still at 3.5%, well over to the 2% Fed mandate, which now we're in year six. It was April of 2021 last time government inflation numbers, not necessarily real inflation that normal humans are dealing with. And it's been since April of 2021 that it's been above 2%. Although that doesn't stop Fed President John Williams there, from saying inflation has peaked, rates are well positioned. So it's interesting though. Let's say that he is correct. Let's assume for a moment that Scott Bessent was correct back in May when he said he saw substantial disinflation as Bush takes over. Well, let's see here. So if inflation is going to go down, that would make it less likely that they would raise rates, more likely that they would cut rates, and certainly we've seen really since that big sell-off in the gold and silver markets in January when the price of silver was down 35% in a day. They said back then Warsh was going to be the hawk. I don't think Warsh was ever the hawk. I think he might be. Inflation is somewhat forcing him to be a hawk, yet you can also see a path. I don't know. I mean, we'll see how the rate continues. I mean, if you got energy prices high enough and they don't go higher and they just settle down a little bit, does that take away the necessity based on the way the numbers are measured to raise rates? We shall see. Again, it's going to be quite a dilemma for them to navigate. But again, this is why, between that and the war, that's why basically gold and silver have been somewhat on hold. I guess you could say since the war, they've both gotten pummeled. But it's felt like we've seen a couple rallies, yet each time something will happen with the war, there will be fears about higher rates, which leaves the metals selling off. And not sure exactly when that will end. My guess is that we're probably going to be in, as the Streeters like to call it, a holding pattern for a while longer. I don't know if the Michael Oliver forecast will be ultimately correct yet. Gee, at least when I think 5 or 10 years from now, what is likely, I'm guessing the prices of both gold and silver have done quite well, even relative to today's prices. And, because at the end of the day, we're seeing a lot of money that being spent and blown up that is going to be paid for with inflation. And even if you look at the Fed futures curve, it's interesting. Only one rate hike now priced in. There had been more priced in, so this changes quite a bit. And obviously, we'll keep an eye on it. Great reason to hit that subscribe button and the notification bell. So, as we track what is going on in the months ahead, you can be up to date. But, few other notes here. We did have some commentary from Scott Bessent, who still, I will say, reminds me of Frank Drebin, but he was doing a tour of the Treasury, and let's check in and hear what Scotty had to say, which is always entertaining. I don't know that I agree with a lot of the things he says, but they are amusing in their own right. So I'll stop and let's hear what Scott had to say here because it's a good one.
At here, these look exquisite.
Yep, so these are the displays of our currency over the years. Some of it, like we used to have silver certificates. We used to be backed by silver, sometimes gold. And then in the 70s, we just
Used to be.
went to what was called fiat currency, where you
Yeah, what heard of that?
didn't have to keep gold or silver in the vault. If any of these are still outstanding, though, the silver or gold for them is at Fort Knox, waiting for them to be claimed if so needed.
Have you visited Fort Knox?
I haven't. I have.
So he has not visited it. They talked a lot about doing an audit. Then Trump was audit talking again a month or so ago. And before we hear the rest of Scott's answer, let's preface this with that he has not been there.
People on my staff has. We're going to the treasurer's office. The treasurer has been to Fort Knox, and I am happy to say all gold is present and accounted for.
So he knows it's present and accounted for, and we'll post an objection with that theory in just a moment, but let's hear just the last few seconds here.
The U.S. has the largest pile of gold in the world, over $1 trillion at current market value.
And we're getting more gold from Venezuela.
I love that he tucks in at the end, and we're getting more gold from Venezuela, amongst rare earths, according to other Reuters reports I've seen, and won't dig back into it today. A lot of the things that have been reported that have happened in Venezuela since the U.S. went in there, in my opinion, are incredibly sketchy. I will balance that with saying that I was up in Toronto last week, and when I got a haircut, see, I'm looking nice and trim there, a little shorter on the sides. The one of the fellas in the shop was actually Venezuelan, and it was interesting. He said that the people were like, God, Trump is a god to the Venezuelan people right now because conditions were very difficult, and getting Maduro out of there, according to him, was something that has been a net positive. So he's from Venezuela. I'll just passing that along. I think it's perhaps a situation where it might have been good. I don't know if with the intention, if that was the primary goal, maybe one of those things that can be accomplished at the same time. But either case, as you see, getting gold out of Venezuela. Although back to the whole audit thing, only problem with that is that there's a few things that Scotty left out of his explanation. Again, he did used to work with George Soros, so maybe that was part of the training here. But let's take a look back at what Stefan Gleason said. This is Stefan, who owns Money Metals, and joined me back on May 20th. So let's take a listen here.
The schedule of seals, and to call that an audit is kind of ludicrous. But really, I mean, what an audit involves is not just opening everything out and inventorying it, but testing it, and actually, in the case of non-pure gold, it might include upgrading the gold to purity standards, which.
Here he mentioned the seals, which comes from some reporting that Jan Nieuwenhuis, who also writes for Money Metals, has done, where many of the seals have been broken, which kind of defeats the purpose of having the seal there in the first place. And Scott did not mention anything about that part here. Stefan's also talking about the purity issues. I mean, if the U.S. ever tried to sell the gold, it could be decades just to get it refined because of purity issues. So we'll see how that one plays out. Although in other Scott Bessent news, here was a wild one. The Trump dollar gold coin is to go into production. Bessent says, so don't worry about getting your gold eagles. You can get your gold Trumpies soon. And that is, I guess, what it will look like, because Trump has added his name or likeness to federal buildings, an airport, bridges, even some passports. I don't know, what was it, the $250 bill he was supposed to get his face on? I'm not sure if that's still happening, but now he's going to get his gold coin while Scott is saying the Fort Knox gold is good to go, although he hasn't been there, and we'll see if he addresses the seals. Although, while all that's happening, quick note, obviously, India, big player in the gold and silver markets, always a bit of, well, I don't want to say a bit of a circus, although it's quite volatile. Here you have India silver imports curbs create shortages, push premiums to 6 months high. Now, basically, a year or 2 years, I think it was 2 years ago now, you had India reduce their gold and silver import taxes from 15% to 6%. Then, about 2 months ago, they raised them back up to 15%. And as a result, it's made things difficult, shall we say. And India's restriction on silver imports has created shortages in the world's biggest market for the precious metals, pushing premiums to their highest levels. And again, not normal circumstances, yet anytime you have a shortage in any region, certainly noteworthy, especially given that it was India that had the shortage last year that was the precursor to the shortage in London, which then caused problems in China. So, once again, government policies have things in somewhat delicate territory in India and did just want to pass that along. And obviously, we'll keep you posted on how that shakes out. And then finally, would just like to give a quick thank you to First Majestic, proud sponsor of tonight's show. And First Majestic did just have their production numbers for the second quarter out last week. Silver production up 3% year over year, gold production up 2% year over year. And they are continuing their drilling at Santa Elena, where they have been doing infill drilling and also getting new gold and silver intercepts, including some high grade results from their resource conversion drilling. And First Majestic going to be releasing second quarter results and the dividend payment on July 30th, 2026. They'll have a conference call at 11:30 a.m. Eastern to go through the results that day. But either case, there is your gold and silver news for this week. Sure hope you enjoyed that. And if you're still a little unsure or a little rattled by some of the recent price movements, well, what better way to feel at peace than hearing what legendary investor Jim Rogers had to say about gold and silver, why everybody should own some, and to find out more, well, that one's coming your way now.